Like in the US, one of the amazing things is if you carry financing, you only pay the capital gains on the amount of capital that you receive. The one of the ways that is really beneficial in the US for to a great way to become a private lender is to actually, when you go to sell a property, would be to carry financing. And so I'll give you an example. So let's say somebody's got a small warehouse where they run their business out of, and they've sold the business, and somebody's decided, oh, we're gonna, we're not gonna use that space. So now they've got this warehouse they need to sell. Let's say it's worth $1 million. And let's say that back 10, 15 years ago when they bought it, they only bought it for 400,000. Right. So if they sell it today for $1 million, they're going to have a $600,000 capital gains exposure. And so in the US, one of the amazing things is if you carry financing, you only pay the capital gains on the amount of capital that you receive. And so if you decided, okay, we're going to sell this thing and we're going to do it and carry seller financing. So you might say, we'll list it for 1.1 million because nobody has to go to the bank to qualify. So there's a benefit there. We can potentially ask for a higher purchase price or sale price, and we're going to sell it. We're going to ask for $100,000 or $150,000 down, and we're going to carry the balance over, let's say, 20 years or 10 years, or it might be amortized over 25 years, but with a 10-year balloon, for example.
Mhm.
And so over those years, and let's say you carry it at a 6% interest rate, which would be super attractive for most buyers that go, oh, well, one, you're cheaper than the banks. Two, I don't have to go and qualify. And three, I don't have all the other hassles and concerns of, this isn't going to show up my credit report and blah, 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 blah. And so that's a great way to get a higher value on your asset when you go to sell it. And two, then you're really only paying the capital gains on one, the down payment on closing day, and two, every year, if it's amortized, then you would say, oh, we got paid down by principal of $50,000. So now we're paying the capital gains on that remaining 50. And so you're spreading out those capital gains over the next, 10 or 20 years, whatever, however long you carry it. So huge benefit in the US